Hey YouTubers, it's Nick540 here. I'm still quite sick, so you have to forgive me throughout this video. I am going to do my full stack video coming up. The last time I did one was January 11th, 2012, so I'm due to do another one. Sorry, 2013. I'm due to do another one coming up shortly. Before I do, I thought I would talk about what was in the news yesterday. This newspaper is from the Globe and Mail, which is a Canadian national newspaper, and it's dated Thursday, January 2nd, 2014. And the title is Can Gold Regain Its Luster in 2014? So what I thought I'd do is I'd read you at least part of the article, and hopefully it can get some discussion going as to what you think. And so please leave a comment, and I'll let you guys look at this gold while I'm reading. Can gold regain its luster in 2014? After the precious metal loses 28% in a year, investors' love affairs come to a bitter end. I kind of disagree with that. If gold were to make a New Year's resolution, it would be to simply perform better in 2014. The precious metal finished 2013 down at 28%, its biggest annual drop in more than 3 decades. Its fall from grace after years of spectacular gains dragged down both mining stocks and the many investors lured by gold's supposed power as a hedge against economic calamity or inflation. More pain may be in store. With the global economy poised to pick up speed, few observers see much chance in the year ahead for gold to raise substantially above its current levels around 1,200 US per ounce. Investors' love affair with gold has come to a bitter end, said John Stevenson, a portfolio manager with First Ascent Investment Management Inc. and author of the Little Book of Commodity Investing. Gold, one of the worst performing assets in 2013, will continue to slump in 2014, is what he says. Sorry about the shaky camera here. So he says this is a far cry from the attitude that prevails 5 years ago when the global economy was teetering on the edge of recession and some investors feared a long-term outbreak of inflation because of central banks' easy money policies. Back then, gold appeared to be an ideal haven for investors looking for an asset that historically has done well in times of turmoil. The metal's price rose quickly, bouncing from a low of about 700 in late 2008 to a record of more than 1900 in 2011. It has been downhill ever since. The precious metal hit a 3-year low of 1,180 in June after the U.S. Federal Reserve announced it would begin tapering its bond buying program, a sign of increased confidence in the U.S. economy. Bullion ended the year at 1,202. Investors buoyed on prospects of global recovery have turned their attention to banks and technology stocks, helping the Standard & Poor's 500 climb 30% in 2013. In stark contrast, shares of many gold miners have lost more than half of their value over the past 12 months. The price of the precious metal has always depended on market sentiment, since unlike stocks or bonds, gold doesn't deliver dividends or interest payments to keep investors loyal. That's something I want to talk about more. But the introduction in recent years of exchange-traded funds that hold gold may be making the metal even more volatile, as we all know. Investors can now buy or sell it with a click of a computer key, unlike past decades when they had to trade coins or ingots. Gold, and then here's a quote, "Gold offers no yield, and that's a world where equities are returning 9 to 30%, said Mr. Stevenson, who expects gold to fall below $1,000 over the next 12 months. Not everyone agrees. While Sprott Asset Management LP, Canada's best-known precious metals investors, took a huge hit in 2013 as a result of gold's fall, Eric Sprott, its chief executive, continues to predict gold will hit 2,400 by next summer. He says there is a massive imbalance between supply and demand that's not reflected in current prices. Most forecasters, though, see the metal advancing only slightly from its previous levels, if it advances at all. I think we may have seen the low for gold now," says Patricia Moore, Vice President, Commodity Capital Specialist at Scotia Capital, who is foreseeing gold to average around 1,270 an ounce in 2014. "I wouldn't anticipate a huge recovery in 2014. The bigger recovery will be in the middle of the decade, which is key to note, middle of the decade. If gold remains at current levels, it will mean more tough calls for mining companies that have already written down their assets by billions of dollars and shelved projects as a result of gold slump. At a gold price of $1,250 an ounce, Producer balance sheets are relatively stable given the cost relations that miners have already advanced, TD Securities' Greg Barnes said in a recent note. There will be problems. Pardon me. There will be problems, however, if the metal breaks lower. A drop to 1100 would be more highly leveraged companies such as Barrick Gold Corp, Newmont Mining Corp, and Detour Gold Corp at risk, said Mr. Barnes. We continue to prefer companies with strong balance sheets in the current gold price environment, he said, citing as his top picks such as companies as Eldorado Gold, Gold Corp Inc., and B2 Gold Corp. Gold stocks may stage a modest recovery in the months ahead simply because they have become so cheap, says Christopher Foster, portfolio manager at Blackheath Fund Management Inc. While he tends to avoid buying gold stocks for his clients these days, Mr. Foster believes many stocks in the sector are now oversold. I think there is a chance here for gold stocks to outperform gold, he said. So very interesting article. There's many points that we could hit on there. One of them is the prospect of gold dropping and, of course, going up in, the mid of this decade, which would be 2015, 2016 time. I don't know what you guys think of that. It's a very interesting article. I think it's well written. They do hit home some good points. And that's a good point about gold not paying a dividend. So that's why I like to diversify my investments into other areas and not just have everything in precious metals. But I'm still pretty bullish on gold. I think that it is going to go up. And as everyone moves away from it, I think it's a great time to buy if they're looking at $1,270 or below $1,000 an ounce. Then I would really start picking it up. So tell me what you think. And again, my apologies for being so sick here on the video. If that didn't make sense, it's got a head full of drugs right now trying to get better. So leave a comment below. Be interested to see what you guys think. And I'll see you in my next video, which will most likely be the full stack video in the next few days.